Okay, so hello students. Let us start with lecture 6 of subject direct taxation, module 1. Okay, so in today's lecture, as you already know, module 1 is comprising of all these elements which we have already covered, and today we will be ending with module 1. And today we will be covering some again problems on residential status of individual assessee. And for your particular year, we will see what are the tax rates applicable, because whenever you will get sums on determining what is the tax payable by SSC. So for that you need to know what are the tax rates applicable. So we will also be seeing that in the today's module. So a quick revision again, section 6 subsection 1 talks about determining the residential status of individual assessee. So if he satisfies two conditions or any of one condition that is visible on the screen, he becomes a resident in India. The first condition is his stay in the relevant previous year should be 182 days or more. And the second condition is his stay in India during the 4 years immediately preceding the previous year should be for a period of 365 days or more. And he should be in India at least for 60 days in the previous year. And then section 6 subsection 6 talks about that once he's tagged as a resident, then whether he's ROR or RNOR, then again we have two conditions. If he satisfies both the condition, he becomes a ROR, otherwise he becomes RNOR. So first condition is he should be a resident in any of 2 out of last 10 years preceding the relevant previous year, and his stay in India in the last 7 years should be 730 days or more. There are exceptions to the basic condition, means any person who's leaving India for business or employment purpose, or any member of a crew of an Indian ship, for that particular, these two categories, the condition that you have to see to determine whether is a resident or non-resident is his stay in the relevant previous year should amount to 182 days. Rest of the conditions become irrelevant. Now let us continue with the problems on residential status of an individual assessee. So we had completed totally 10 problems. So let us go to the 11th problem. Mr. Kohli, a citizen of India, is an export manager of Arjun Overseas Limited, an Indian company since 1/5/2014. He has been regularly going to USA for export promotion. He spent the following number of days in USA for the last 5 years. So they have given the previous year and the number of days spent in USA. Determine his residential status for the assessment year 1920, assuming that prior to 1/5/2014 he has never traveled abroad. Okay, students. So what are they telling us? That there is a person who keeps visiting USA for export promotion, but he keeps on going to USA and then coming back also. So for each year, what is his number of days spent in USA is given. Means in the year 2015, if he's staying for 317 days in USA, the balance number of days he's staying in India. Similarly, in 2016, if he's staying for 150 days in USA, the balance days he's staying in India. So how to determine the residential status? Is to find out the first basic condition. The first basic condition says that his stay during the previous year, okay, should be 182 days or more. Now, if they have given the assessment year as 1920, what is going to be the previous year? The previous year is going to be 2018, 2019. So we have to check that in 2018-19 whether his stay in India was for 182 days or more. Now here 2019, this comes in 2018-19 because it is 31st March 2019. So he stayed in USA for how many days? he stayed in USA for 294 days minus 365 because the balance days he's staying in India. So that is 71. So in the previous year, he's just staying for 71 days in India. So is he satisfying the first basic condition? No. Since it is not exceeding 182 days, it is only 71 days, hence it is not satisfying the first basic condition. Now let us see whether he is satisfying the second basic condition. Second basic condition is that his stay in India for a period of 4 years preceding the relevant previous year. Relevant previous year is 1819. So preceding this, his stay in India should be 365 days or more. Now let us, how did we get 48? It is 317 minus 365. Because if he's spending time in US in 317 days, then the balance he is staying in India. Similarly, 150 minus 375. 365, sorry. Then 271 minus 365 and 311 minus 365. So accordingly, we get total stay in India in days as 48 for the assessment for the year 14-15. For the year 15-16, it is 216 days he's staying in India. 16-17, 94 days, and 17-18, 54 days. So if we add all this, the number of days that he's staying in India during the 4 years immediately preceding the relevant previous year is 412 days. What is the second basic condition? His stay in India during the 4 years should be 365 days or more, and in the previous year it should be 60 days or more. At least 60 days means 60 days or more. So he is satisfying the second basic condition. Now, if he's satisfying any of the basic condition, he becomes a resident. So therefore, he is a resident in India. Now, here you will be saying that he's he's gone outside India for employment purpose, but no students, because he's not gone for employment purpose. He's going outside India and then coming back into India. So there is no continuity of stay in a particular country. So note that the condition of 182 days for citizen not applicable, as he has not gone for employment abroad but has been going out of India only during the course of employment. He's actually employed in India, but he's just going outside India for the promotion. So in the course of employment he's going, but he's not going for employment outside India. Therefore, this is not an exception. Therefore, we have to not just see 182 days, we have to see other conditions also. Now, once he's tagged as a resident, then we need to check whether he is a resident and ordinary resident or resident and not ordinarily resident. For that, he should satisfy the two additional conditions. Now, what are the two additional conditions? First of all, he should be a resident in any 2 years out of 10 years immediately preceding the relevant previous year. Correct? So let us see, the relevant previous year we have already seen is 1819. So forget 1819. Preceding that 10 years we have to see. So that is 1718, 1617, 1516, 1415. And prior to 1415, he was always in India, because in the question it is given. Here it is given that assuming that prior to 1/5/2015 he has never traveled abroad. That means before 1/5/2014 he was always in India. So he was always a resident in India if he was always in India. So therefore, based on the basic conditions, we have got him as, for 1718 he was a non-resident because he was staying only for 54 days. For 1617 he was a resident because it was 94 days. He satisfies the second basic condition, hence he becomes a resident. 1516 he again becomes a resident because he is satisfying the first as well as the second basic condition. And 1415 he is for 48 days. He is not satisfying both the basic conditions, hence he becomes a non-resident. And prior to that he was always a resident. So now, last 10 years, if we see, any 2 years he is a resident, more than 2 years he is a resident. Therefore, he is satisfying the first additional condition. Now we have to see whether he's satisfying the second additional condition. Second additional condition is his stay in the 7 years preceding the relevant previous year should be 730 days or more. Now, if you calculate 54 plus 94 plus 216 plus 48, it comes to 412. But prior to 1415, he's always been in India. So plus 365 plus 365 if you do, it is becoming 1000 more than 730 days, like 1142 days he's staying in India in the 7 years. So he's satisfying the second second additional condition also. Therefore, when he's satisfying both the additional conditions, he becomes a resident and ordinarily resident in India. Therefore, he is tagged as ROR. Now, did you all understand the problem number 11, students? Have you understood the solution to problem number 11? Then we can move ahead.
Yes, ma'am.
Everyone understood?
Yes, ma'am.
Yes, ma'am.
Okay, now let us move ahead to problem number 12. X, a foreign citizen, resides in India during the previous year 1819 for 83 days. Determine his residential status for the previous year 1819, assuming his stay in India during the last few years are as follows. So here they have directly given us the previous year, and the previous year is 1819. So keeping this as base, we can solve the problem. So they have given us what is his stay in India from 2003, 2004 to 2017, 2018. They have given us for each year how many number of days he's staying in India. It is given year wise. So 2003-4 he's staying for 220 days. For 2004 and 5 he's staying for 15 days, and so on up to 2017-18 he's staying in India for 67 days in the year 2017-18. Now we have to determine his residential status. So first thing we have to see is the first basic condition, which is specified under section 6 subsection 1 clause A, which says that his stay in the relevant previous year should be 182 days or more. Now the relevant previous year is 1819 and his stay is only for 83 days. So is he satisfying the first basic condition? He is not satisfying the first basic condition. Now let us see whether he satisfies the second basic condition. Second basic condition is specified under section 6 subsection 1 clause C, which says that his stay during the 4 years immediately preceding the previous year should be 365 days or more, and in the previous year it should be 60 days or more. Previous year it is satisfying, it is 60 days or more. Now let us see the 4 years preceding that. So it is going to be, if the previous year is 1819, 4 years before that is going to be 1718, 1617, 1516, 1415. Now you calculate 121 plus 175 plus 15 plus 67. So the total number of days in the 4 years immediately preceding the current or the relevant previous year is 378, which is exceeding 365. Therefore, he is fulfilling the second basic condition. And even if he fulfills any one of the basic condition, he becomes a resident in India. So let us see the solution. During the previous year 1819, X was in India for 83 days, and during 4 years immediately preceding the previous year, he was in India for 378 days. How we got 378 days? It is calculated based on what I showed you earlier. Now thus he satisfies one of the conditions that is specified under section 6 subsection 1, and he consequently will become a resident in India in the previous year 1819. Now once he is a resident in India, what is the next step we have to do is check whether he is ROR or RNOR. So that is specified under which section? Section 6, subsection 6. So the first condition is he should be a resident in any 2 years out of the 10 years immediately preceding the relevant previous year. So we leave the relevant previous year. So it is going to be from 17-18 1 year, 16-17 2, 3, 4, 5, 6, 7, 8, 9, and 10. You have to consider these years and check whether in each year whether he was a resident or a non-resident. So let us see the calculation. As it is from the question, I have copied these two columns. Now let us see whether he is a resident or non-resident. Okay. Year in this year he is tagged as a resident. How do you tag whether he is a resident non-resident? Based on the basic conditions. So which condition he satisfied? He satisfied the second basic condition which is specified under section 6 subsection 1 clause C. Next is 15. He is a non-resident because he is not satisfying any of the basic condition. Third one, he becomes a resident under which condition? Condition number 6 subsection 1 clause C. Similarly, I have here based on the number of days you can find out whether he's a resident or a non-resident. So for the year 14-15 he's a resident, 13-14 he's a resident, 12-13 he's a resident, 11-12 he's a non-resident, 10-11 he's a resident, 9-10 he's a resident, and 8-9 he's a resident. Now out of the 10 years, at least 2 years, in fact more than 2 years he's been a resident. Therefore, he is satisfying the first additional condition. Now let us see whether he satisfies the second basic condition. The second additional condition. Now second additional condition is his stay in the last 7 years should be 730 days or more. Now last 7 years will be 1, 2, 3, 4, 5, 6, 7. Now whether in these years his stay is 730 days or more. So you have to add the number of stay in India. 67 plus 15 plus 175 plus 121 plus 310 plus 265 plus 137. So his stay in India in the last 7 years is 1090 days, which is more than 730 days. Therefore, he is satisfying the second additional condition also. So since he is satisfying both the additional condition, what does he become? He becomes a resident and ordinarily resident in India. So let us see the solution. Condition 1 of section 6 subsection 6 requires that an individual should be a resident in India for at least 2 out of 10 years preceding the relevant previous year. X was resident in India for 8 years out of 10 years immediately preceding the previous year. Thus, he satisfies this condition. Now, condition 2 of section 6 subsection 6 requires that an individual should be present in India for at least 730 days during 7 years preceding the relevant previous year. Now, X was in India for 1090 days during 2011, 12 to 17, 18. Hence, it satisfies this condition also. Now, X satisfies condition 2 of section 6 subsection 1 as well as both the conditions of section 6 subsection 6. Therefore, he is a resident and ordinarily resident in India for the previous year 18-19. Have you all understood the solution number for problem number 12?
Yes, ma'am.
Yes, students?
Yes, ma'am, understood.
Yes, ma'am. Understood, ma'am.
Okay, so very good. We have completed with problems on residential status. I have covered all the type of problems, whether it is more calculation, less calculation, and complicated, simple, all the types of problems are covered. So based on this, you all can solve any problem, even if it comes in exam. Similar type of problems will come in exam. So we have completed with the problems on residential status of individual SSE. I hope everyone has understood both the basic conditions, both the additional conditions, because based on that only you will be able to solve the problems on residential status of individual SSE. Okay, so moving ahead, let us see now the tax rates applicable for assessment year 2020-2021. Because currently you're in which year? You're in a year of 2020-2021 where 2021 has not yet completed. Therefore, the applicable previous year for you all which is completed is 2019, that is 1st April 2019 to 31/3/2020, which is completed. Therefore, the assessment year for previous year 1920 will be 2020-2021. So for your batch in your examination, they may ask the calculation of tax payable for the assessment year 2020-2021. Now, in order to know what is the tax to be paid, first you all should know the rates. So that is why I am showing you all, will be explaining you all the rates applicable to different SSEs. Like individual, we'll see what are the rates. We'll see the rates for senior citizen. We'll see the rates for super senior citizen. We'll see the rates for firms, cooperative societies, LLPs, companies. So we are going to just go through the different tax rates applicable, because by the end of your syllabus, you all will be having problems on determining the tax payable by an SSE. So in order to know what tax has to be paid, you all should know the rates, and that is why we are going through this. So let us begin. So if an SSE is an individual, now I already explained you all these terms, so you all are well versed with these terms. Who is an individual? So if in an exam or if you all come across any SSE who's an individual, who is a HUF, who is an association of persons, body of individual, or artificial juridical person, then what is the tax rate applicable? Where the total income of all these people does not exceed 2,50,000. Suppose the income of this particular person does not exceeding 2,50,000. It is 2,50,000 or less than 2,50,000. The tax rate applicable will be 0%. That is, there is no tax applicable if the income in a year, in which year I'm talking, income in the previous year 1920, whatever is earning, is not exceeding 2,50,000. Please don't apply any tax rate. Now, if the income is more than 2,50,000 but less than 5 lakh, then you have to charge 5% on the amount between 2,50,000 and 5 lakh.
Ma'am,
So on,
ma'am,
yes,
ma'am, it's
yes.
5 lakh, no? 5 lakh or 2,50,000 now from the 2018, no, sorry, 2019 income, basic, sorry, sir.
For the previous year 1920, these are the rates that, tell me.
Means I am asking that 2,50,000 or 5 lakh. It's a limit of zero taxation. Hello.
I can't hear you.
In the previous budget, it's amended, no, 5 lakh, up to 5 lakh.
In the previous budget. So previous budget gets approved in the next year. So for the assessment year 2021, 2022, those rates will be applicable.
Okay, ma'am. Means
The budget that was that was declared in this Feb 2021 or 2020, what budget was declared, that becomes applicable from the next assessment year.
Oh, okay. Okay, ma'am.
So a budget is declared 1 year ahead. 1 year ahead it is declared, because because a budget requires approval and then consent, and then it turns into, that bill turns into an act. So it is declared 1 year ahead. So
Yeah,
these
ma'am.
are the rates that are applicable for your examination based on the previous year 2020-2021.
Okay, ma'am. Thank you.
Is it clear? Okay. So for the total income, that yeah.
Ma'am, then the 5 lakh peak is applicable for the next year, no? From the next year, it is applicable.
For the next, yes, because it was budget that was declared in this Feb, which Feb 2020. Now, Feb 2020, what was declared, it will not be applicable for your previous year 1920, right? Because 1920 was already into picture. So 1920, whatever rates are applicable, that rates are applicable from the previous budget. See, you all
Okay,
know
ma'am.
budget is always declared for the next year, not for that year, not for that particular previous year. Budget is not declared. Now, obviously, if they have to tax for 1920, will they declare the rates for 1920 in Feb 2020? No, they have already declared the rates for 1920 in the previous year itself.
Ma'am, it
Are
means
you getting
it
me?
will be applicable from the April 2021, 2020.
Very good, correct. So for when this becomes a previous year, when in for previous year 2020, 2021, when the assessment year will be 2021, 2022, it will be applicable that time.
Okay, ma'am.
Are you
Okay,
all
ma'am.
getting
Okay.
it?
Yes, ma'am.
For your exam purpose, still previous year 2020, 2021, when it will get over in March. So is it got over? No. So for your exam purpose, this will be the year that they will be considering for your questions. That is previous year 1920, which is assessment year 2020, 2021. Because for an assessment year which is not yet come, they will not give problems on assessment year which is not yet come, right? Are you all understanding?
Yes, ma'am.
Everyone have got it right? Okay. So can we move ahead?
Yes, ma'am.
Okay. Because your exams will be in the month of Jan, right? So still that year only will not be completed. It will completed in the month of March. So this will be the applicable tax rates for you all in case of your examination, as well as currently we are going with this only because previous year has got completed and this is the assessment year that we are going 2020, 2021. Now 2020, 2021 cannot be the previous year now because still the year is not yet completed. Still the income has to be earned up to March 2020, 2021. That's the reason we are considering the current period as this. Okay. Now, if your total income exceeds 2 lakh 50 but does not exceed 5 lakh, then you need to pay 5% of the amount of income that you're earning between 2 lakh 50 and 5 lakh. So that is on 2 lakh 50, you need to pay 5%. Now, where the total income exceeds 5 lakh but does not exceed 10 lakhs, you need to pay 20% tax on this plus the tax that you have already paid in row number 2. Where the total income of all this individual HUF, AOP, BOI exceeds 10 lakh, you need to pay 30% of the amount of total income on which the income exceeds 10 lakh. So just remember, up to 2 lakh 50, no tax, 2 lakh 50 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, and 10 lakh and above, 30%. Have you understood this slide?
Ma'am, please
Yes, ma'am.
explain with an example.
Yes,
Yeah,
ma'am.
I couldn't hear. What?
Ma'am, please explain again. Means with an example, ma'am. If
See,
it is
if okay, listen. Suppose if I'm an individual and my income is only 1 lakh, which I'm earning in the entire year from 2019, 1st April 2019 to 31st March 2020, if my income is 1 lakh. Now, will I be chargeable to tax? Answer is no, because my income is not exceeding 2 lakh 50, it is only 1 lakh for the entire year. So nil. So what does this sentence mean? Where the total income does not exceed 2 lakh 50 means where my income is 2 lakh 50 or less than 2 lakhs, then there will be zero rate of tax. That is, I'm exempted from paying tax since I'm falling in a lower income bracket. Did you understood the first row?
yes, ma'am.
Okay, the second row says that suppose my income is between more than 2 lakh 50 but less than 5 lakh. Suppose my income is 4 lakh. Now 4 lakh is falling in which row? It is obviously falling in the second row where it is more than 2 lakh 50 but less than 5 lakh. Then how much tax I need to pay? I need to pay 5% tax. 5% tax, not on the entire 4 lakh. 4 lakh minus 2 lakh 50, because on 2 lakh 50 I need not pay tax. Only on the balance I need to pay tax. So on 1 lakh 50 I have to pay 5%. So it is 7,500 tax I need to pay. Now
Yes, ma'am.
suppose
I
in my,
got this.
did you got it?
Yes, ma'am.
Similarly third and similarly fourth. So remember, 2 lakh up to 2 lakh 50 no tax, between 2 lakh 50 to 5 lakh 5%, between 5 lakh to 10 lakh 20%, and more than 10 lakh 30% tax.
30%.
Have you understood?
Yes, ma'am. Yes.
Okay. So can we proceed?
Yes, ma'am.
Okay. Now suppose if that particular individual is a senior citizen. Now when I talk about senior citizen means he should be more than age of 60 but less than age of 80 years. Then he is called as senior citizen. Okay. Now senior citizen, only the difference is, I'll just tell you, there it was 2,50,000. Now here it is 3 lakh. Where the total income does not exceed 3 lakh, it is nil. That is, that senior citizen need not pay tax. Where his income is exceeding 3 lakh but not exceeding 5 lakh, 5%. Where the income is exceeding 5 lakh but not exceeding 10 lakhs, 20%. And where the total income is exceeding 10 lakhs, 30% tax. So remember, in case of senior citizen, only the difference is he's getting more exemption, that is 50,000 more exemption. That is, he's getting total income does not exceed 3 lakh. Up to 3 lakh, he need not pay tax. So have you all understood this slide? And this slide is applicable for senior citizens of the age of 60 years or more, but they should be less than 80 years. Have you all understood this slide, students? It is similar to previous slide. Only the limit from 2 lakh 50 to 3 lakh has increased because he is a senior citizen. Got it, students?
Yes, ma'am.
Okay, next. Suppose he is a super senior citizen. Now, what is super senior? We have seen a senior citizen is 60 and above and less than 80 years of age. But suppose he's 80 years or more in his age. Then what will be the tax rate? Up to 5 lakh, he need not pay anything. Like suppose his income is 5 lakh in the previous year, he need not pay anything. Less than 5 lakh, he need not pay anything. There is an exemption up to 5 lakh rupees. Then the second thing is where his income exceeds 5 lakh but does not exceed 10 lakhs, then 20% he needs to pay on that amount. And where the total income exceeds 10 lakhs, he needs to pay 30% of tax. So in case of super senior citizen, up to 5 lakh, no tax. 5 lakh, exceeding 5 lakh, up to 10 lakhs, 20% tax. And where the total income exceeds 10 lakhs, 30% tax. Have you all understood this slide? All you need to remember is the tax rates, because that is what you all will be applying in your problems. Have you all understood? Shall we proceed?
Yes, ma'am. Yes, ma'am.
Yes, ma'am.
Okay, so all these we have seen for an individual, for an HUF, for an AOP, BOI, artificial juridical person. Now let us see, we know there are different types of persons, right? Which we have already seen in our definition of person. Now let us see for a firm. Suppose if a person is a firm or a LLP, that is limited liability partnership. If it is, then on the whole of the total income, how to determine the total income, I have already explained in my lecture number 2. Okay, I will revise it, no doubt, but first we'll just go through it. So on the whole of the total income, 30% tax. So remember, on the total taxable income, you have to charge 30% tax if the person whose calculation you're doing is a firm or LLP. Next, if the person whose calculation you're doing is a local authority, then on the total income you have to charge 30% tax. And if he is a cooperative society, then you have again 3 slabs. Where the total income does not exceed 10,000, then 10% of tax you need to apply on the income. Where the income is exceeding 10,000 but does not exceed 20,000, then 20% of the tax you need to charge. And when the total income exceeds 20,000, then 30% of tax you need to charge. Cooperative society, more likely it will not come in your examination, but that doesn't mean that you all are not aware of it. But so just for your awareness, I am just giving this cooperative society what is the tax slab rate, even for your knowledge. So is this slide clear to all? Yes?
Yes, ma'am.
Yes, ma'am.
Okay. Now
Yes,
the
ma'am.
next type of, very good. Now the next type of person we are remaining it with is a company. Company we have not covered. Let us see for a company. So now in case of a company, in case of a domestic company, now domestic company is one which is an Indian company falling under Indian company. Now if the total turnover or gross receipts in the previous year 17-18 is less than or equal to rupees 400 crores, then you have to charge 25% of total income as the tax. So 25% will be applicable only to those companies, only to those domestic companies whose turnover in 17-18 is less than or equal to 400 crores. In exam, it will be specified the turnover based on which you have to select the tax rates. So it should be 25% tax you need to charge for those companies. Now, suppose if it is not falling in the above category, then in all other cases, it is 30% of total income. So remember, for firm, LLP, local authority, for companies, it is 30% of total income. Now, in case of companies other than domestic company, that means it is a foreign company, if it is not a domestic company, then it is, what is the tax rate that you will apply? 40% on the total income. So 40% is the tax you will charge on the total income. So why am I explaining all these tax rates is because when you solve problems and depending upon the type of person that they have given, whether it is a company, firm, LLP, you should know what is the tax rate applicable. Is this slide clear, students?
Yes, ma'am.
Is this slide clear?
Yes, ma'am.
Yes, ma'am.
Okay.
Ma'am, why written 2017-18?
Because that is what is specified in the act, in the bill that was passed, that 25% should be charged to those companies whose turnover is less than 400 crores in the previous year 17-18. So they should be charged with a lesser amount of tax, because since their turnover is not that high, so they should be charged with 25%. That is what Nirmala Sitharaman had got into picture. So is this clear,
Okay.
students? Okay.
Yes, ma'am.
Now, as we know that up to here it was on the income that you're earning from salary, from house property, from business and profession, and that's it. So they are totally 5 heads of income. But capital gains, they have special tax rates. Now you know there are totally 5 sources or 5 heads of income. So out of that, capital gains are charged to tax separately. They have a separate rate of tax. Okay. Some under capital gains, they come under this normal tax slab rates, which I have just explained you all. But some capital gains, they are charged separately under separate tax rates. So that is why I'm just going to explain you all. So capital gains and others, this in detail, again, we will be doing when I'm going to deal with the chapter relating to capital gains in detail. There also, I will be telling you all what is the tax rate applicable if you're earning a capital gain. But this is just along with the tax rates I'm taking you all if you are earning a long-term capital gain, okay, 20% is the tax that will be chargeable. I'll just take you all very quickly with this, because in detail we will be seeing in that module. If you're earning a long-term capital gain on transfer of equity share in a company, or a unit of equity-oriented fund, or a unit of business trust, provided security transaction tax is being paid on all this, okay, then you need to pay 10% tax, provided the capital gain is more than 1 lakh. So this section is applicable only where the capital gain is more than 1 lakh. Then you need to pay 10% tax if you're earning the capital gain based on the sale of all this. Next is if it is a short-term capital gain on transfer of the same as specified. That was long-term. In the previous slide, it was a long-term capital gain. In the next slide, this is a short-term capital gain. Then you need to pay 15% tax. Suppose you're winning from, now this is not capital gains, this is income from other sources. Suppose you're winning from lotteries, crossword puzzles, races, card games, gambling, then whatever you're earning, irrespective of that, you need to charge 30% tax. So you should not see whether he's a person, what type of person he is. The normal slab rates, what I've explained earlier, that will not be applicable in case of winnings from lotteries, crossword puzzles, all this. Flat 30% you need to charge. Next, income if you're receiving by way of dividend, and whether dividend amount is exceeding 10 lakhs, then you need to charge 10%. Only when your dividend is exceeding rupees 10 lakhs in a previous year 1920, then you need to charge 10%. Next is unexplained money, investment, expenditures. You need to charge 60% tax. Now, what do you mean by unexplained money? Suppose if the assessing officer come across Assessee and he catch holds of certain money which is not able to explain from where he is got, from where he is earned. There is no proof, there is no documents for that. So that becomes unexplained money. So for that, 60% flat will be charged on that particular income or money which the Assessee is not able to tell the assessing officer from where he is got, what is the source of that income. So in that case, 60% flat will be charged. Now, next, we have completed the tax rates for all the types of persons, as well as specially for capital gains and income from other sources. We have specifically seen, which in detail we will be seeing in that particular modules or chapter. Next is surcharge. Now let us see when is surcharge applicable. Now remember students, surcharge is nothing but tax on tax. Based on the normal tax slab rate, you will calculate a tax for an individual or for an Assessee. But surcharge is a tax on your income tax. So surcharge is an additional tax payable over and above the income tax. So normal income tax you will pay, but surcharge is some additional amount that you need to pay. And surcharge is always calculated as a percentage of income tax. So when you calculate surcharge, you have to calculate it on income tax. And income tax you calculate on total income. Remember students, income tax is calculated on total income. Surcharge is calculated on income tax. That is why surcharge is called as tax on tax. Now, in case where the total income of an individual, HUF, AOP, BOI, artificial juridical person, in that case, these are the slab rates for which the surcharge will be applicable. So where the total income is more than 50 lakhs, but less than equal to 1 crore, you are going to charge 10% of surcharge on your income tax. So by this, what do we understand? That up to 50 lakhs, if a person is earning income up to 50 lakhs, there will not be an surcharge, there will not be an additional tax that will be payable by the Assessee. Now where the total income is more than 1 crore, but less than or equal to 2 crores, 15% surcharge you need to add. where the total income is more than 2 crores but less than or equal to 5 crores, 25% of surcharge you need to add, and more than 5 crore, 37% of surcharge you need to add. So remember students, up to 50 lakhs there is no surcharge. If your total income is more than 50 lakhs, then only surcharge will come into picture. That is only 10% of income tax. So have you understood this slide? What is surcharge and when it is applicable? It will be applicable only when the total income exceeds 50 lakhs. And it is to be calculated on income tax and not on your total income. Next is rebate. Have you understood, students, this surcharge?
Yes, ma'am.
Yes, ma'am.
Okay. Next is rebate under section 87A. Now rebate, the word itself means reduction in the tax to be paid, correct? So rebate is a relief that is given by the government to an individual taxpayer, Now persons, we have plenty, we have 7 categories falling under the heading of persons, but rebate is only provided to an individual taxpayer, okay, who is a resident. And rebate is a relief that is given on the amount of tax that an individual taxpayer has to pay. Then what are the conditions? Who is liable for this rebate is only those individual taxpayers who are falling under 5% tax slab. So in order to provide tax relief to individual taxpayers who are in 5% tax slab, section 87A provides a rebate for the tax payable by an assessee being an individual resident whose total income does not exceed rupees 5 lakh. So he is going to get a rebate of the amount of income tax payable by him on the total income, or the amount of rupees 12,500, whichever is less. So this rebate is applicable only for those individual assessees whose income is not exceeding 5 lakh, first of all. And what is the amount of rebate he will be getting? He will be getting a rebate of whatever tax he's paying on his total income, or the amount of 12,500, whichever is less, that will be the amount of rebate, and that amount will be deducted from his income tax payable. So this is just a summary of the applicability of surcharge and rebate. See, surcharge is applicable when your income goes on increasing, and rebate is applicable when your income is at a lower end. Remember that. So where your income is less than or equal to 5 lakh, surcharge obviously is not applicable, because surcharge is applicable only when your income is exceeding 50 lakhs. Rebate is income tax on total income or 12,500, whichever is less. Now where your income is between 5 lakh to 50 lakh, obviously rebate is not applicable, because rebate is applicable only when your income is less than 5 lakh. And obviously surcharge also is not applicable, because surcharge is applicable only when your income is more than 50 lakhs. Now all these cases is where it is more than 50 lakhs, more than 1 crore, more than 2 crores, and more than 5 crores. Obviously rebate is not applicable, but surcharge, as we have seen, will be applicable based on the slabs of income. Next again is health and education cess on income tax. So whatever tax becomes payable, like the tax plus you add the surcharge if applicable, or you minus the rebate if applicable, on that you will charge health and education cess at the rate of 4%. Okay, so health and education cess is to be mandatorily added on income tax, whereas surcharge and rebate are not mandatory. It depends on the slab rates. But health and education cess has to be mandatorily charged at the rate of 4% on the income tax that you're paying plus surcharge if you're charging surcharge. So that's it. Then let us see how to calculate the tax payable by an assessee. So first, we have already seen in lecture number 2 how to calculate total taxable income or total income. We get that amount. Then depending upon what type of assessee he is, we will apply the tax rates on the total income. We will apply on the total income tax rates. We get the tax payable. We add surcharge. We less rebate depending on the total income. And this surcharge and rebate we will surcharge will be charged on this tax to be payable. Then when from this tax to be paid, when we add surcharge, on that we again add health and education cess at the rate of 4%. Or if it is a rebate, then on this total tax to be payable minus rebate, on the balance we charge health and education cess at the rate of 4%. Then we get tax payable. So tax payable will be nothing but total tax to be paid on the total income, add surcharge, add health and education cess, you get the total tax to be payable by an Assessee. Or if it is a case of a rebate, then you get tax on total income less the rebate amount, add health and education cess, then you get the total tax payable by an Assessee. Now, we'll just revise what is this total taxable income. Like I have already told you all in the lecture number 2 that how to determine the total taxable income of an Assessee. That is, first you will determine the residential status. Based on that, you will classify the 5 heads of income, that is income from salary, house property, profits and gains from business and profession, capital gains and other sources. Then individually you will calculate what is the income falling under each of these heads. Then you will apply the clubbing provisions. You will apply set off and carry forward of losses. You will get gross total income. From that gross total income, you will do deductions under section 80C to 80U. Then you will get this total taxable income. And from this total taxable income, you need to see the income and apply based on that the tax rates. Have you understood this part, students?
Yes, ma'am.
Okay, so by this we have completed the module 1, that is basic concepts of income tax. Thank you so much, students. In case you all have any doubts relating to today's lecture, you all can ask.